Good morning, everybody. Welcome to the Locke in Your Success Options Trading for Income Weekly Update for October 13th, 2014. Before we get going, we would like to remind you that we're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware trading options carry substantial risk, so please be aware of all your risks prior to placing any trades. And be aware that we also are using hypothetical computer simulated trades in the presentation. And although the results are believed to be as accurately represented as possible, there are a possibility that live results may differ in some way. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs. The M3, Bearish Butterfly, ROCK, M21 group coaching, and our Trading Triangle one-on-one coaching programs. And join our mailing list to get the free report, 7 secrets to becoming a successful trader, and sign up for this free weekly webinar. All right, let's take a look at what's going on in the markets. Last week, I was thinking that the Russell would probably drop down into the 1080 range and then likely take a bounce. That's pretty much what happened. We had a drop down into the 1080 range. We had this capitulation move, and we had the short-term traders came in and bought the market there, which was pretty much as expected. What I didn't expect is I didn't expect it to roll over this quickly. And of course, we broke down to new lows, and it was pretty much all over to the downside from there. So that being the case, where do we go from here? Well, the market's going to tend to remain a little bit unpredictable. One thing I can tell you is when you lose all your support levels on the yearly chart, that's never really that good of a thing. So we actually have to come back to our 2-year chart to get any sort of support level on the Russell. I also drew in this Fibonacci level here because the reality is we don't have any real significant support areas in the Russell down at this 850 level. And the reason is because the move from 2013 and to early 2014, they were so aggressive it didn't really leave us much for a support level under this 1100 to 1080 area. So that being the case, we would expect that the markets continue to stay in more of a downtrending type of a situation. And that's, again, if we're only looking at the Russell. But I have these Fibonacci's in here because I'm looking for them to line up with some sort of shorter-term support levels on the Russell so that we can get our bounce points. So here, we have this Fibonacci level right about where we ended up on Friday, lining up with this green line is just the center line of our channel. So if we went to a 10-year chart, actually let's go to an all-time chart on the Russell, just so you know what that is. All this green line represents is this is our primary uptrend channel in the Russell 2000. This green line is the center of it. It's an area that we often reverse off of. So we essentially came down into this area. Could we get a reversal off of here? Yeah, we very well may. I mean, there's probably nobody else actually looking at this number. It's just something that I observe in general, is that it commonly does reverse here. So this is a kind of a John Locke indicator. Take that for whatever you want. But we're also in some other longer-term support levels back here. So if we have our Fibonacci level come in here, this is a decent area that we may get some support off of. So there is some indication that we may get some support off the Russell, although I would tend to venture to guess that we're probably going to continue lower a little bit later. So if we come to the SPX, we're actually at a decent support level here in the SPX. So that being the case, and when we come down to our 200-day moving average, we have reasonable support at 1900. Wouldn't be surprised to see some sort of a market bounce off of here, at least a large amount of participants in the market wanting to at least buy this short term. Like I said, the markets, other than the Russell looks like it's going down. This here, so far, looks like it wants to stay in a sideways trend. If this stays in a sideways trend, the down moves in the Russell should be fairly light. The support levels from Fibonacci levels and minor levels from last year should hold okay. Shouldn't be anything too major. We get a break at this level in the SPX, a significant break. We're probably going to get a pretty good down move in the Russell. So this is what I'm kind of watching here. because this is the only index that's holding support, and if this one goes, the rest of them are going. Because if you look at the NASDAQ's already broken its shorter-term support level. We have a bit of a level here at around 13.8, but really our primary support's at 13.7. So we get a breakdown of this level here on the NDX in conjunction with the SPX. The whole market's coming down, and of course the Dow is going to want to come down into this 16.3 level. So in general, the tone is changing from a more bullish tone to, or a sideways, well, it's been changing from a bullish tone for a while, but it's still in a sideways type of tone at this point in all the indices except the Russell, which we're a little bit bearish. So essentially that's what I'm thinking. We're going to have a little bit of hard time getting some real good predictability here, which is why the M3 trade tends to work really good in this environment, because it leaves you a lot of leeway to go in either direction. So still a little bit of a toss-up on direction. I mean, short term, like I said, I wouldn't be surprised to get a bit of a bounce, at least intraday, off of this level due to the SPX being near a support level. From there, we're just going to have to watch the levels and see where it goes. All right, so let's just take a look at how our trades are going here. We were in a ROCK trade in October, and we had a V Condor trade into October as of our last update. So up until Thursday, this ROCK trade didn't need any adjustments. This is what we look like here. If you remember, the ROCK trade was in an M3 configuration, because that's what our entry test told us to do. And at this point here, we're taking on too much positive delta, and we're well over our 113 limit. So what we had to do is we had to take this and we had to roll this back. So if we come just another half hour ahead, this was rolled back to, was it Thursday? Let me make sure I have my date right. Yeah. So on Thursday, this had a rollback, and here's our new position here. So all we did is we took our shorts that were up here. I believe they were at 10. Yeah, shorts they were at 1060. We rolled them back to 1040. We also rolled our long 1010s back to 990, and then we rolled our long 1100s back to 1110s back to 1090, and we put our shorts at 8 of them at 1070, 8 of them at 1080. Brought our delta still to be slightly positive, but we flattened our T+0 line out as we do in normal M3 procedure, and this looks basically perfect. Going into the next day, we got that continued down move, and because we got the continued down move, I was going to have to actually adjust this down again, and quite frankly, coming into expiration, 7 days to expiration, with the market getting very volatile, it makes more sense to close this than to fight it. The reality is we could do something here. We could certainly, bring these 8 shorts down, maybe to here, right? And we could maybe take these 5 back to maybe here. I'd go a little bit further than that. Let's go to just an example, right? We could have given ourselves some more downside room here, and for today, and still had plenty of upside protection. So you can bring this right into expiration fairly safely. The reality is, though, if we're going to get really, really choppy, and say we take another 20-point hit to the downside today, we're not going to be making any money there. And if we get a 20-point move tomorrow, then to the upside, or today to the upside, then that wouldn't be a problem either. So we certainly could take this into expiration if we wanted to, but I just chose to close it. So I closed this out and ended up pulling in about a 5% profit, so a little bit more than 5%, 25.73. So good good rock trade. Like I said, lower than expected returns, but of course we put this on 30 days to expiration. We had nothing but pretty much a straight down move since then. So good trade for that type of conditions. All right, so I have a couple of questions here. So I didn't hear you well because my voice was too low. Why? This is why the M3 does well. Oh no, I'm just saying this is the M3. The M3 is a great trade for when you don't know where the market's going, because it's very, very resilient to market movement in either direction. So that being the case, if you had to choose, make a choice between a rock trade, bearish butterfly trade, or an M3 trade, I really like the M3 trade, especially when the market's been down a lot and we just don't know where the market's going. Of course, the rock trade's excellent too, because the rock trade, if the market's volatile, is going to put you in an M3, because that's the way the system works, and it will work very well for that. And I mean, a bearish butterfly is also a great trade in high volatility, with the exception that you are taking on the risk of having the market reversal come up. And I mean, technically, nothing's actually gone bearish here except for the Russell. I mean, everything is still technically long-term in an uptrend, even though we've got a significant down move, and shorter term going into a sideways trend. So that being the case, if I'm going with the broad general markets, that the broad general markets are technically still in an uptrend, I have to favor the upside, or at least be aware that there could be a very, very harsh upside move coming off of this level. And an M3 would be better than that in that situation than a bearish butterfly would, obviously. And an M3 would be, at 56 days to expiration, would be easier to manage than entering a rock trade as an M3, 30 days to expiration. So my preference in this environment is an M3. That's all I was saying there. All right. My thought process to choose verticals for adjusting the M3. All right, so this is this case here, right? If I go back to, okay, this is the rock trade. Yeah, so it's a rock trade M3. So here, I'm assuming you're just talking about that level last adjustment that I did. So one of the things I'm thinking here is, first of all, I'm very close to expiration. Second of all, so I'm going to treat this a little bit differently than something I would closer to expiration. I'm having a delta problem. I'm exceeding my maximum delta. I'm still, oh gosh, what are we? At this point, we're 60, at least more than 20 points from our short strikes. So I might not necessarily want to roll back the short strikes as easy. So to correct my delta, instead of rolling back the short strikes, I might do something like roll back these short strikes, because I don't want to roll back my 1040s, right? The problem when I do this is that I create a situation where now I take on risk to both sides. This is not within an M3 type of trade concept. So that being the case, I want to do something to get rid of this sag. There's a couple of things I could do. I mean, I could come in here and I could buy some calls. Right, I could buy just a single call down here, maybe. Maybe that's, well, we'll look at that. Right, and that takes off a lot of that. Another thing that I can do, which I like doing a little bit better sometimes, but particularly close to expiration, if I'm fairly happy with my profit number, another thing I'd like to do is just take this back down to here. And that's going to essentially remove all my upside risk and still allow me to make money if the market hangs around. So it's just different ways of manipulating your position around. So and that's a good technique for specific circumstances. All right, so how to manage a down move within the last half hour of Friday. At 15:30, my pip trade looks like plus 20 delta. A half an hour, it's plus 50. Yeah, basically we ignore it. I wouldn't manage it all. Leave it till the next day. Essentially, the way we've back tested these, the way we've tested them for years, a lot of times by the time you're quarter of 5 or 10 minutes of 5, it's really too late to make any sort of a significant type of adjustment. if it's so bad you feel you have to do something, I mean, you just have to buy put protection to bring you into the overnight. But basically 99.9% of the time I'm just going to leave it alone. See what it looks like on Monday. Here is the ROCK complete T-log. I can't show it all here in one screen apparently, so I'll just push it up a little bit and go back and look at that. On the M3, if we continue down in the Russell today, what price point do I consider adding verticals and taking off the long calls? Okay, that's for November. Oh goodness, here we got a whole bunch of these. So just hold on for a second here. Should we expect, Derek? I'm assuming that you're talking about a November position. So I will save that till we look at a November position. Should I expect more difficulty with the T+0 line sag to the upside when volatility has increased, such as currently, and has lots of room to drop, versus what we had earlier when volatility was low? You should expect no trouble with sag in high volatility environment. It would be very, very unusual to experience. In other words, until you get really close to expiration, sag should not be a challenge. These are actually much, much more friendly in a high volatility environment than they are in a low volatility environment. Low volatility environment, or anytime really close to expiration, you may experience that sag issue, but you shouldn't be experiencing it during high volatility. It's going to be less and less prevalent. Okay, can I show the T-log for this trade? Yes, I'm doing that now. There's in November. Do I show the ROCK trade log for the first part of the trade? Yeah, so this is it. This is the entry part. Yeah. All right. Is the option market going to be tradable today? As far as I know, it is. I have one website that said it's not, and I have one website that said it was. The one that said it was the CVOE, so I'm going with that. Let's just quickly shoot over to our V Condor for October. This trade here, if you remember last week, up until this point, this trade had no adjustments. We had our long straddle at 11:30. We have these short calls up here, which are pretty much completely worthless right now, and we're taking pressure to the downside. As of this point, if you remember last week, I was talking about how we had both a November and a October V Condor in the same strikes, which I do not like to do. And one of the things that will cause me to shut one of these down early is when I have two in the same strikes, and I have an issue where I may lose them both at the same time, which is pretty much what we're going at here. The November V Condor is not doing well. The October V Condor was doing okay till now, but now I was going to have to make an adjustment to the downside here. And the reality is our gamma started getting really high, and if the SPX breaks down, we have could conceivably take a loss on this. So that being the case, I just shut it down. I shut it down, and that came to a look at the T-log. This is where I shut it down towards the end of the day on the 10th. And if we take a look at our reports here, this just took a small profit of less than 3,000. Oh, okay, now I'm not closed. I didn't completely close the position yet. So far, it looks like it's going to take a, let's look at the analyzed graph. It looks like it's going to take because this is after I shut down the lower side, it should take a win of $1,184. The only thing that may happen, which is very unlikely, is we get an explosive up move and I start to make money with these calls here, this call here, in which case I'll make a little bit more money. But as of right now, you can see the downside risk is completely gone, and I'm just planning on letting this expire, taking the 1,100 gain and moving forward. If we take a look at Let me just pause this for a second, guys. I'll take a look at how we're doing for the year since everything's essentially closed for October. Let me just drag this sheet over here for you guys. This is how we are essentially doing for the year. So Bearish Butterfly, as of October close, has had 9 wins, 1 loss. We are up 123% of our planned capital. And we're pretty much on target for our 140% expected return on that trade. Our M3 trade is up 78.7%, which has had 10 wins, no losses. We are above our expected return for M3 this year. It's been a nice sideways year, and everything's been going really well. For our ROCK trade, we have 10 wins, no losses as well. We're up 95.4% of planned capital. We have 10 wins, no losses for the year, so it's been very friendly as far as a win-loss ratio. However, the profits or the wins have been somewhat muted due to the way the market's been moving around. And of course, the V Condor's been a little tough on that trade this year, and this is a trade that does not like volatility. It likes grinding up markets, as in 2013, did very well 2013. This type of market is not going to do so well. 8 wins, 2 losses, with a 20.8% return for the year so far. Gives us a 79.5% return on average of the trades on planned capital. When we combine that with the fact that we're only trading with 50% of the account, it's giving us a 39.7% return on the entire account. And like I said, a 79.5% return on the planned capital. So very good so far this year, and we'll see what November and December bring us. So let's take a look quickly at the November trades. I will go to, let's go back one day. We'll go to the November, the V Condor first. Saying the November V Condor did not look well. If we take a look at this, we had to, on the 10th here, which was on Friday, I had to buy back another one of these puts at these 1030 puts to get our delta down under our minimum level. So if we take a look at Friday, here is what the position looked like. We're definitely pushing the downside. Essentially from here, it's more or less a wait-and-see game with this trade to see what's going on. If the market crashes, or if our delta picks up a little bit more, we may end up buying one more of these puts. If the market crashes, a lot of times this will actually end up making money because we'll get into this side here. If the market stays stagnant, eventually this will come back. If the market bounces hard, usually we can break even or make something on this up in here somewhere. But as of right now, it's kind of a wait-and-see game. It's not going to be a good month either way. This is our current put side position here. Here's our current long side position. And I just showed you a C-log. So that is the November V Condor. As far as M3 trade, let's see, M3W. This here, let's just go to Friday afternoon. I don't believe there was any adjustments till Friday. So as of Friday afternoon, this trade had no adjustments for the week, and we're down past our short strikes. By 3:30, we were pushing our maximum delta numbers. So I did go ahead and I did roll this back. So we see where our short strikes are at the 1070 now. I also rolled back the call, by the way. So our calls here up at 57 delta. That's at 1050 as well. If we push this ahead a half an hour, you can see the call is down to 1,000, and our butterfly was rolled back to 1040. Gives us a position that looks like this. So I'm still positive delta. However, I have my tent a little bit further back. I'm ready for the big bounce if it happens. If the market continues down, we still have some room to the downside. So this is the November M3. So I got a question on this, and so I had a question on this earlier, and it was just, sometimes what we'll do in advanced M3 is we will pull the calls off and add some vertical spreads in here, something like this. Um, and then trade it in this manner for the remainder of the trade. And that's usually to take care, that's when we think we're going to get a bounce, and it's to take advantage of volatility. If I think I'm going to get a huge bounce, I'm not going to do that. If I think I'm going to get a moderate bounce, then I might want to do something like that. And if I think the market's kind of bottomed out, I might want to do something like that. As of right now, I'm concerned from a technical standpoint that the Russell is going to take a drop down to, because we have, if you take this range right here from about 1080 to 1210 and consider we broke our pattern to the downside, that gives us a target. We have to go to the 2 range for. That gives us a target on that pattern of about 950. So that being the case, I wouldn't be too surprised for this thing to wander its way down to 950 in the near future. Assuming if we get that SPX support break we've been talking about, if we get support breaks in the other indices, I wouldn't be surprised to see this down on the 950 level. That being the case, I would not be interested in flipping that over to a different type of position at this point. I'd rather just stay in a regular M3 position. All right, so that is the November M3. We have our November. Okay, hold on a second. I had a guideline for my November M3, so yesterday I rolled back my shorts 20 points if they were hit early in the trade. At what point would you switch to normal guidelines for M3 using position delta? I'm always using position delta, and I'm always using that 20 point. I'm always using guidelines that if I go significantly under my short strikes, I'm going to roll a position back. That's where all my risk is. So I'm essentially always going to use that. If I get under my short strikes, and that's usually only going to happen early in the trade, when I get under my short strikes and I'm running into a delta issue, and I'm positive delta really at all, I'm going to roll that back. Would I hesitate to enter a bearish butterfly today? No. I mean, you get very good. Well, it's not due for the day. It's not due till the end of the week. But you get, if the volatility remains very, very high, you get very, very nice upside range in a bearish butterfly. And I'm not afraid of it in high volatility. The only time I don't like to enter it is when we've had substantial down moves and volatility as well. Then I tend to avoid it and modify it. And can I show the T-log for this M3? Yes, I can. Here is the position here. The only other trade we currently have on is a November bearish butterfly, which actually has had absolutely no adjustments since we put it on. So this trade here is, we are starting to push the downside a little bit, but as of right now, we don't have an adjustment point till 1040, and that's not 1040, 1050, and that's going to be an end-of-day close, or towards the end of the day type of close type of thing, and we'll roll this back to at the money if that's the case. Now that move I don't particularly like. I don't particularly like moving these back to at the money if they get too close to expiration, but now I'm thinking, hey, I'm 42 days to expiration. I'm actually okay with that move. If I was, say, 20 days to expiration, I wouldn't be okay with that, but I take that back. I am okay with moving this back to at the money. But that's the bearish butterfly. So T-log for that, we've had no changes since the last time. So that's all we have for positions. And let's see what else we have. I believe I answered everything except for one last question that just came in. Do I advise doing these trades on the weeklies at 56 days to expiration? I do actually have a few students who have done some, and they've been fine. I will tell you that the weeklies do react differently. There may be liquidity things going on. I do not have enough personally experience to tell you to do a 56-day trade on a weekly. So my answer is I really don't know. The trade concepts are well enough where they should do fine, and it really shouldn't be an issue. I don't see an issue other than maybe a liquidity issue or an execution type of an issue. But as far as the concepts themselves, and they should be fine. There's no reason you shouldn't be able to do that. Is it okay to start a December M3 today? I'd probably wait till a little bit closer to expiration. If you enter early and really high volatility, you usually end up spending a lot of time in the trade for no reason. So I'd probably tend to wait another week or two. And if I delay rolling back my M3 and it goes down, is it too late to roll back now? No. The M3 trade is very, very forgiving. There's, and that's how you determine a good trading system. You should never have to make an adjustment at 2 p.m. on Thursday, or the trade took a maximum loss, where if you did adjust it would have taken a maximum win. I mean, you'll get slightly different results if you push the rules a little bit, but in general, the concepts behind the trades are strong enough that that's the whole point. You can let them go most of the time past their adjustment points. You can make adjustments late. It really doesn't make that much of a difference. The reason I like to roll down an M3 trade, or when I get under the shorts, is because all my risk is there, right? So I'm assuming if you're trading an M3 trade, you're doing it because you're trying to control your risk, and if all your risk is to the downside, yeah, I mean, you get way back here in the 10th. This is where you're going to take your more major losses. If you can keep yourself up in the front half of the butterfly and up in here, you really shouldn't ever take a really huge loss here if you have the proper software, using your option key software on the right settings, and you're keeping within the concepts of the trade. You might take a loss up here, but it should be minimal. The only real tough risk you have is down in this direction, so you should be able to deal with that and not worry about that. All right, if we get a bounce today, and let's say my M3 is centered at around 1050, would I consider to move it back? Hold on a second. If we get a bounce today, let's say your M3 is centered at around 1050, would I consider? If I get a bounce today, there's really no reason to roll it back. No. I'd probably want to wait, unless I had a delta problem. So I'd want to wait till I either have a delta problem or I'm below my short strikes towards the end of the day. So that, and then I had an advanced M3 question. What makes an M3 an advanced M3? So all I'm saying from an advanced M3, well, there's a lot of things you might want to do. And I say advanced only because it's separate from having a butterfly and a call on. So when we start talking about unhedged M3, that's a advanced M3 concept. And we talk about doubling the size of our M3 to double our returns. Now, one of the things about the M3 is it's overly capital intensive on purpose. You can actually double your returns on this trade if you're willing to loosen up your maximum loss a little bit. Those are advanced M3 concepts, and also the idea that we're not holding in any sort of a butterfly call structure necessarily. In other words, if you get an advanced, what we call an advanced M3, you might end up with 10 longs here, 5 shorts here. Who knows? 5 shorts up here. I mean, you might end up in some sort of a weird position like that. I'm just kind of throwing those out there. That's not going to make any kind of analyzed graph. But you may end up in a position with basically options all over the place. In other words, you don't care if you're in a butterfly structure anymore. All you're doing, you're controlling your T+0 line, and the strikes could be anywhere. But even though the strikes are anywhere, you're still going to have a graph that's very similar to an M3 graph, and you're going to have a T+0 line that is basically in M3 concept T+0 line. So when you get into the more advanced stuff, that's what we talk about. And let's see, is a positive delta problem worse or better than a negative delta problem? Well, I guess that depends on which way the market goes. I mean, you know what your risk is to the upside. Your upside risk in this trade is minimized. I mean, usually, and if you're in a strong uptrending market, obviously a negative delta problem is more of an issue. If you're in a choppy market, you can basically let your delta get a little bit wider. If you're in a downtrending market, you might want to be a little quick on the trigger to the downside and just protect your upside for the bounce. So it depends on the situation there. All right, so I'm going to have to close up and get going. Oh, one big thing here, which I forgot to mention completely. At 10 o'clock, I am doing, these are hypothetical positions, although, like I said, they are real time, and I do them as accurately as possible. I have my $600,000 KTG trade that SMB is allowing me to, it's a live trade, and they're allowing me to track that trade and show that publicly, but only within their system. So you have to be a member of optionstribe.com, but if you're a member of optionstribe.com, then we're going to be going over what I put on for November on there, and it's going to be the live position. We're going to track it through, and I'll let you know how that goes. And that's Eastern time. And have they sent out a link for that? I don't know. I'm sure. I mean, if you're an Options Tribe member, they have. Does anybody know what the Options Tribe site link is? Maybe you can throw it in the chat. I think it's just optiontribe.com. And you can sign up there, and we'll be going over that trade every Monday at 10 o'clock, which means I actually have to get going shortly because I have to get ready for that meeting. So I'd like to thank everybody for joining me. Okay, if you haven't received the link, so what you should do is, ask Seth at optionstribe.com. Let's see, Seth's email is sfruberg@smb.com. So email Seth if you want to get in there today. Or should let you know how to sign up for that. And we'll be looking at how I enter November, and also might take a little bit of a look at last month's trade. Yeah, the Options Tribe member will be recorded through the Options Tribe system, and you're going to access the recordings the same way that you would any other Options Tribe meeting, as far as I know. So again, Seth is the contact for that, and you're going. So have a great week, everybody, and we'll let you go.